Welcome to another video yet again. So you can see on my last video, which was uploaded on Sunday when the market was closed, I did call out ticker, you can see in the top right, I did call out ticker PNBK at $1.65 in this video. But you can see on Friday, before that video even came out, I did call out ticker PNBK at $1.42. Now if you look on the chart, this one did run from $1.42 all the way to highs of $3.07 just yesterday for a massive 100 and over a 115% plus gainer. So drop a quick like for me on this video if you are enjoying this content. It does really help me out. I have nothing at all to sell you, and these alerts are completely free, and make sure you have the notification bell turned on because these alerts are extremely time sensitive. Also, make sure you watch this entire video all the way until the end so you do not miss the vital exclusive information I will be discussing near the end of the video and in the middle of the video as well. So I do have a penny stock that is currently trading around $1 per share that is ready for a massive explosion. Now, why do I say that? Because the chart is looking extremely well right now. Just recently, they did announce a contract with United Healthcare Insurance. Now ticker UNH is a $500 billion market cap company trading over $500 per share. And just a few months ago, they also announced a partnership with Cigna, which is an $80 billion company trading over $300 per share. Keep in mind that this penny stock has a tiny microscopic $7 million valuation, or just around that level, and the company does have a very small 1 million share float. According to Webull, we have zero dilution filings with an active share buyback going on. So this is an extremely rare gem in the penny stock market. And looking on the daily and weekly time frame, we do have a symmetrical triangle formed, and this one does look ready for a massive breakout. You can see we are just starting to break out of this downward trend line. So this is a healthcare company that does have around 65 employees. So the stock I'm talking about in this video is ticker KDLY, Kindly MD, which is a patient-first healthcare and healthcare data company uniquely integrating traditional primary care and pain management strategies with integrated behavioral and alternative therapies to offer patients comprehensive care and reduce the addiction and dependency of opioid use in the United States. So why is this so big? Well, one of Trump's biggest goals for 2025 is ending America's opioid crisis. And it does say, according to this article, that the administration is allocating $10 billion to fight opioid addiction, with funds directed toward rehabilitation centers, overdose prevention programs, and public awareness campaigns. So it looks like the administration is looking to fund companies just like ticker KDLY. So it does say right here that currently Kindly MD operates 4 centers, including the largest alternative pain treatment center in Utah, with a focus on holistic pain management through its specialty outpatient services, including the recommendation of medical cannabis by Kindly MD healthcare providers. Kindly MD is providing better patient health outcomes. They are also a medical cannabis type play, and that's a sector that has been completely heating up as of lately. So both of their sectors that they directly target could potentially have tremendous benefits from the new Trump administration. There are currently zero dilution filings, and it does say right here, according to Dilution Tracker, the company has 10.7 months of cash left based on a quarterly cash burn rate of $720,000 and estimated current cash of around $3 million. So they did IPO just, it looks like, in the end of May of 2024. They do have these warrants right here, but both of these warrants, both types of these warrants cannot be exercised until the stock price reaches $6.33 per share. So these are not a concern at all, it looks like. So looking at the daily time frame on the chart right here, you can see this one is currently trading at $1.42, and we do have this beautiful symmetrical triangle pattern that we are currently holding over this downward trend line, and it looks like the MACD down here is on the verge of switching over, which will cause strong bullish momentum. If we look on the weekly time frame, we also have the same symmetrical triangle pattern, which is very bullish. We are currently holding over this or breaking out of it. So looking on Webull, we do have a tiny 1.27 million share float with a very small $8 million market cap. And the chart does look extremely well right now, looking for that massive breakout. And something else we really need to note right here is we did just recently close over the 50-day moving average, which is a very positive sign. Looking at the next resistance levels, first one is around 149, then 168, just around this level. And then we do have some resistance around this 192 level, and then $2, right at $2.21. So those are some levels to look out for. Or what it really comes down to whenever these stocks or these plays do become extremely volatile and the liquidity does come in, that is when I do go to the 5-minute time frame and I do use VWAP, and I am looking at the level 2 data and mapping out new levels. So whenever there's high volume on a ticker, I do use the 5-minute time frame, and I still do notice or take note of the resistance levels I did mark out on the higher time frames, but I am strictly very diligently focusing on the level 2 data and the 5-minute chart when high amounts of volume, starts to come in. So just remember that. So what really makes ticker KDLY stand out is, yes, this is a biotech or a pharmaceutical and healthcare type company, but most of these, healthcare companies are losing a ton of money every single quarter and are filled with debt. And that is not the case with Kindly MD, as they do currently have $3.6 million in total cash. Keep in mind, you always add 3 zeros to these numbers. And they do have $4.3 million in total assets compared to only $840,000 in total liabilities with zero long-term debt. So, most of these biotech plays, like I said, are losing a ton of money. And if you look at their cash burn rate or their net loss for the most recent quarter, they only lost $1 million. So, considering they do have $3 million cash on hand, this should last them at least the next 3 quarters, maybe even longer than that if their net loss does go down, because you can see in the first quarter of 2024, they only lost $282,000. And something else to look at, it looks like their total liabilities have been on a downtrend for the last few quarters, as they did go from $1.2 million in total liabilities all the way down to $840,000 in total liabilities just in 3 quarters. So that is, a very positive sign, especially for a healthcare and pharmaceutical type play. Now, looking at their investor presentation, you can see they do have 4 different clinics. Their flagship location is in Salt Lake City in Utah, and then they do have 3 other locations. And something really massive right here is they do have 5-star reviews, or they have over or just around 200 5-star reviews, which is a very good sign right here. Looking at their most recent press release just a few weeks ago, on January 22nd, Kindly MD opens new integrated behavioral health clinic on the Ogden Regional Medical Center campus. So the opening of this location in January allows Kindly MD to enhance access to a larger hospital referral network. That's pretty big. And looking on Dilution Tracker, looking at some of their most recent headlines, yes, they do have a ongoing active share buyback, and the float is already around a 1 million share float. So that is extremely bullish right there. Just in the end of June of last year, they did announce successful government grant application, which does enable them for potential government funding, which is massive right there. So in June of last year, Kindly MD becomes first Utah alternative medical treatment company to contract under the state's top insurance payers. So I do believe I mentioned this before, but Kindly MD is Utah's largest alternative pain treatment facility, And they do say Kylie MD is also one of the largest providers of medical evaluation and management services related to treatment recommendations within the medical cannabis program in Utah. And it does say that so far to date, Kylie MD has treated over 60,000 patient visits in their clinics. So they are heavily related to the cannabis sector, which is a sector that has been heating up as of lately. And if we just look at some of their other headlines, they did just contract 7 months ago with Blue Cross Blue Shield under Utah's top insurance payers. 3 months ago, they did announce that $500,000 share repurchase program. And just reading their most recent 10Q filings, I do not believe they have initiated any of these buybacks yet. So that is another catalyst right there. And just recently, 4 months ago, they did announce a contract with United Healthcare Insurance, the largest health company in the United States. Keep in mind, ticker UNH, United Healthcare, is sitting around a $500 billion market cap. And just 3 months ago, they did announce that new partnership with Cigna Healthcare, which is an $80 billion company, and they are partnering with them to further expand patient care accessibility. And that's all I have for ticker KDLY. Let me know in the comments what other plays you're watching, what you think of this play, and I will see you on the next video.